Well, Deven, coming across to you, Voltas, the market share has slipped a little bit. The street doesn't like it too much. What's your take on the stock?
Yeah, Nigel, good afternoon. Well, on one side, I think the overseas projects and I think the provisioning pertaining to that has dampened the profits for this particular period, and I think also resulted into a loss, in fact, due to provisioning. On the other side, I think the not so good news is about the market share and I think the growth. At the same time, the commodity pressure continues as far as I think the cost aspect is concerned on the margin side. So all in all put together, I think unless the recovery happens smarter, probably I think one will have to wait for a little longer time as I see it. Maybe as I think I would talk it out, I think this particular quarter is a washout quarter as far as the earning and the performance is concerned. Maybe we'll have to look out for the cues somewhere in the February, March 2023 for the better summer and thereafter the growth therein. So till that point of time, I believe that I think the stock price might not perform as much as I think one would like it to be.
Deven, talking about poor numbers, the other one I was noticing is Relaxo. And I think the company joins us tomorrow for a chat, but numbers are a complete washout. The margins are down from 16%. I mean, basically, they've almost halved. Profits are down some 65-70%. Do you track this one? And by the way, valuations are almost at 100 times earnings.
Yeah, that's a challenge, Prashant, and I guess I think it is going to be true for many of the companies where the valuations are on a higher side. You don't have the scope for any kind of error as far as I think your business performance is concerned. And for whatever be the reason, though I have not gone through in detail about the numbers, but for whatever be the reasons, I think smallest of the I think the performance disappointment would possibly, I think, not be very kind as far as I think the market is concerned. I think the stock price will get probably punished. In my viewpoint, I think this is a period wherein most of the companies where I think the valuations have actually gone ahead far in advance for next 2 years, and I think the performance has remained muted. I would think that I think some amount of valuation derating is in place for many of the companies, not talking in particular about Nexo. But the point which I'm trying to say is that many of the companies where the valuations have peaked ahead of time could possibly be the ones I think would be suffering for next couple of quarters till the time I think the price correction takes place.
Okay, the company, even in Q1, it was a disappointing set of earnings from Relaxo. The company was trying to protect its margins at the cost of volume, at the cost of the top line, but now even the margins are giving way if you don't have volumes. So that's clearly hurting, Relaxo footwear this time. But let's talk about Indigo Paints that released its numbers. Revenues are up 23%. Mangalam is here with the fine print. Mangalam.
Well, the revenues of the company are up by 23%. The EBITDA is the one which has actually grown by about 45% for Indigo Paints, and the margins have expanded. And this despite the gross margins remaining flat. And as a result of that, the net profit has actually grown extremely higher. And the net profit is also aided by a 9 crore tax credit versus a tax expense of about 5 crores. So all these things have led to the big boost that we're seeing in the company's EBITDA as well as the net profit. Why is it that the EBITDA is higher despite stable gross margins? That's because the ad spends of the company are lower versus last year. Ad spends as a percentage of sales was 16% last year. Now it's 14.7%. And the reason for that is because last year the IPL was split into two, and the company has a lot of spends during the IPL. They have Dhoni as the brand ambassador as well. So as a result of which they spent a lot more in the second quarter for advertising, and that has come undone this time around. And importantly, the commentary is something that the street likes because the company is saying that now that raw material problems are subsiding and the worst is behind, they will expect to focus on growth going forward, and future focus will be on aggressively increasing growth with expecting much sharper increase in profitability. So these two lines from the management commentary is something that the street likes. These numbers are good, but a large part of that goodness is purely optical.
Okay, thank you very much for that. The stock is now up close to about 12%. Deven, any thoughts on Indigo Paints? And earlier this week, we also had numbers coming in from Kansai and Nerolac. Thoughts on the industry itself?
Well, I would think that the industry per se is having relatively better time, largely because of the fact that the raw material prices have come under control. And at the same time, the demand scenario remains upbeat. So obviously, I think the growth on one side and I think lower cost on the other side is adding into the possibility of companies reporting relatively better performance going forward. So the preference in the pack would be definitely Asian Paint, which continues to be the leader, and I think the would dominate the kind of a show, given the sheer size and the volume that also they have. The likes of Indigo could possibly be the next best choice, I think, as I would like to call it. Maybe I think one will have to watch a little bit more carefully about I think how exactly they increase their margins going forward.
Thank you. Welcome back. It's flat on the index, but it's a day of big gains and moves on individual stocks. So one of them is M&M Financial. It's up close to about 13% in trade post their Q2 numbers. The Q2 numbers were very strong. The Q2 disbursals came in at a 16-quarter high, but thereafter, in the month of October as well, we saw a very sharp increase, I think 28% increase on a month-on-month basis in the October disbursements compared to the prior month. Listen in to what the management had to say when we chatted with them earlier.
Clearly, maintaining a 10,000 plus crore disbursement should not be a challenge. The second half for rural is the best half. And fortunate, the monsoons have been good. Support prices seems to be good. Infra is opening up. So we are very, very positive in terms of the trends that we see in the rural market, both from demand as well as from the collection front. AUM, we are already clocking 15-16% growth, and the disbursements are more aggressive as we see from the numbers. So therefore, maintaining this kind of a double-digit growth on the AUM should not be a challenge again.
All right, well, management sounding confident there. They're also talking about ROAs of around 2.5%, NIMs of around 7.5%, and good growth in terms of disbursements as well as on the AUM front. By the way, Deven, coming across to you on Mahindra and Mahindra Financial Services. Before that, just want to point out Rainbow Medicare Hospital. Well, the numbers look pretty good. Big growth on the top line, close to around 18% out there. Margins have expanded a little bit to around 35%, and profitability as well has surged up. And that explains why the stock is within 1.5% from a 52-week high. So good going out there, and I think the stock has perked up a little bit. But Deven, as promised, tell us what's your view on Mahindra and Mahindra Financial Services. Looks good. Stock blasted away more than 10%.
Yeah, I think despite of that one-off kind of a provision that they had to make in this particular quarter in the reported result, I think this strong commentary has possibly helped. And I think what very surprised, because I think in the rural area, the activities are quite robust, and particularly the segment in which they are in the farm equipment segment, I think where the demand scenario remains, I think, extremely strong. So the disbursement, I think, which they are talking about, which is, I think, eye-popping number, at least I think it is in this particular reported quarter. And continuing that further, with 9% sequential growth that they reported in this disbursement, I would think that I think going forward situation could be relatively much stronger. And that's where probably the argument would be that the stock can be held into the portfolio. Maybe the corrective dips, I think, in the market whenever it gives an opportunity to add such kind of companies into the portfolio.